Good day, everyone. Trust you're doing well today. Today, we're talking about stocks update on how the market performed last week. The Nigerian stock market just sent a quiet signal, but most investors are missing it. Now, if you only look at the headlines this week, you might think nothing really happened in the market last week. The market moved up just a little. No major breakouts, no major crash, no dramatic news, just a slight gain of about half a percent. And that is exactly why this week is more important than many people realize. Because sometimes the biggest clues about where the market is going next appears when things looks sort of calm. Let me explain. The Nigeria stock market, all share index ended last week around 244 700,000 points. On the surface, that does not look like a big deal. But if you have been following this market closely, you will know that the Nigeria stock market has already delivered an incredible run this year. We are talking about a market that has gained more than 56% since the beginning of this year. Well, that's not normal. That's a major move, like a huge move. Whenever a market rises this much, one question immediately comes up, right? Can it keep going? Or is a correction coming? That is the real battle happening right now. And last week gave us some interesting clues. Let's start with what happened. Last week, Monday began on a positive note. Buyers came into the market and pushed prices higher. Nothing explosive though, but enough to just show confidence. Then Tuesday arrived. Again, buyers stayed active. Large stocks helped kept the market, moving forward. Then by Wednesday, the market was still gaining, although the speed had slowed down. And then Thursday came. The market dipped slightly, just a tiny decline, and not enough to change the overall picture. However, it was enough to tell us something important. Investors are becoming more careful. Notice something interesting. Despite several positive trading sessions, right? The market was unable to produce a strong breakout. That really does matter. It matters because if buyers were extremely aggressive right now, we would probably have seen prices pushed, much higher. Instead, the market spent, the whole of last week moving sideways while holding its gains. This is what experienced investors call consolidation. At this point, 240,000 ASI point is what everybody is actually watching. This number has become very important. Why? Because investors pay attention to round numbers. They become psychological, support levels. As long as the market remains comfortable around 240,000 points, most investors will still believe the market uptrend is still alive. And right now, the market is doing exactly that. It is staying above that level. That is one reason why many professional investors are not panicking. But there is another reason. Money is actually still moving around inside the market. And this is where things get interesting because one of the strongest areas of the market right now is still the financial sector. When banks and financial stocks remain healthy, it usually means big investors are still participating. Large institutions rarely move their money randomly. They tend to stay where they see value and opportunity. So the fact that banking stocks are still attracting attention is a positive sign. But there is another story developing quietly in the background. Insurance stocks. For a long time, many investors ignored this sector. Now, some insurance stocks are beginning to show strength, and this tells us something important. Instead of leaving the market completely, investors may, simply be moving their money from one sector to another. This process is called sector rotation, and it happens quite often during strong bull markets. The market remains strong overall, but not everything is positive. There is one warning sign that deserves attention. Consumer goods stocks. Well, most definitely, some well-known names in this sector have been under pressure. And this matters because consumer goods companies actually depend heavily on, ordinary Nigerians spending money. When people are struggling with higher food prices, transportation costs, electricity bill, and general living expenses, they usually reduce spending on many products. That can actually affect company earnings. So while the broader market is still holding up, weakness in consumer goods is telling us that the real economy still faces challenges. This is something investors should not ignore. Now let's talk about volume. because this is where many people make mistakes. A market can rise, but the real question is this: how many people are participating in this rise? Now, think of volume as the crowd supporting a football team. If a team scores a goal and the entire stadium erupts, that goal has strong support. But if only a few people celebrate, something feels different. The same principle applies in investing. When prices rise and trading volume rises too, that is usually a stronger signal. Last week, volume gave mixed signals. Activity was quieter earlier in the week, then it picked up later. That does not mean trouble is coming, but it tells us investors are still trying to decide what happens next. And that brings us to the biggest question: what could really happen from here? Right now, there are three main possibilities I could actually think of. The first possibility is that the market continues moving sideways for a while. Honestly, this is probably the most likely outcome. After such a massive rally this year, it would not be surprising to see the market spend some time consolidating before making, its next major move. Now, the second possibility is a fresh breakout. If buying activity, increases and more money enters the market, the All Share Index could push above recent highs and continue, its upward trend. For that to happen though, investors will want to see stronger volume supporting higher prices. Now, the third possibility is a pullback. Just, normal correction. Markets do not move upward forever. We all know that, right? Sometimes they need to pull back before continuing higher. This is perfectly normal. Now, here is what I'll be watching very closely. First, can the market stay above 242,000 points? This is a key support zone. If that level breaks with, heavy selling, it will be an early warning sign. Second, what happens to the banking sector? If major banking stocks begin falling again, that would suggest institutional investors are becoming less confident about the market. Third, what happens with the naira and oil prices? Nigeria stock market is still heavily influenced by both. Any major shock in either direction could change investor sentiment very quickly. And finally, volume. If we start seeing very strong trading activity combined with rising prices, that will be a powerful signal that buyers are ready for another move higher. So, what is the bottom line? The Nigerian stock market is not showing signs of major weakness right now. In fact, the bigger trend remains positive. What we are seeing looks more like a market taking a short break after an extraordinary run. Money is rotating between sectors. Institutional buyers, still appear active. Key support levels are still holding, but investors are becoming more selective. And that means this is no longer the type of market where everything goes up together. Stock selection is becoming more important at this point. The next few weeks could tell us whether this market is still preparing for another leg higher or whether a deeper correction is waiting around the corner. For now, the bulls still have the advantage, but they don't need to prove it. And the market will soon reveal the answer. Now, if you are looking to get regular stocks recommendations and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share frequent market insights to enable you, beat the market. So if you're interested, indicate your interest by, sending me a mail via the email in the description box of this video. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.